Focus. Ideate. Innovate. Enable.
It all begins with one word. Imagine. Imagine living the life that dreams are made of. Imagine breathing clean air. Imagine a world of professional opportunities to explore. Imagine waking up to newer horizons beyond geographic confines. Imagine your imagination turning into reality. NISA Global and CNBC TV18 present Global Horizons.
Good talent will always be required, and companies will always be looking for good talent. When you look at the top destinations in terms of where people are going to, Europe is right up there. The Portugal, Greece and Spain golden visa programs have been very attractive. We've started Ireland as a destination recently. Now Ireland is a very interestingly placed country right now, because Ireland is now the only English-speaking country in the Eurozone. And because of the visa challenges that American tech companies are facing in the US, they're expanding in a very big way in Ireland. The US EB-5 program has obviously been very, very popular, so much so that the Chinese now face a 15-year backlog waiting for a green card under the EB-5 program. Canada is also a growing country where you're seeing a lot of skilled migration right now under the Express Entry program, because again, Canada is trying to attract large companies to come and set up operations in Canada, and the only way these guys are going to come is if there is a talent pool available in Canada. Country of migration that suits you best is actually really defined by you, right? It depends on the reason of your migration. It depends on what you want to do when you get there.
Global horizons are now easy to discover if you plan to migrate abroad. NISA Capital and CNBC TV18 recently organized the Global Investment Immigration Summit in Mumbai, where immigration attorneys and experts from various geographies converged to talk about the opportunities, risks and rewards, as well as the technicalities related to exploring your dreams abroad.
This investment immigration program, as we know, is a win-win for everyone. The desired country gets investment, it creates jobs, while for the concerned person or the individual, we're talking about a faster route to get permanent residency and eventually a citizenship. So we're going to be covering all the core geographies here. On that note, a warm welcome to all of you, and we thank NISA Global for organizing this. Mitch, let me start with you. US has always been called the land of dreams. And it's one of the most popular destinations for this immigration investment. Very briefly, just tell us about EB-5 and the possible changes in regulations that we should expect.
So EB-5, extremely popular, as we've been talking about all day. For an applicant born in India, it's going to be the quickest way to secure permanent residency, short of becoming the spouse of a US citizen. The other more traditional routes to acquire permanent residency, EB-2, EB-3, which is the second and third employment-based green card categories, are backlogged decades. So right now, the EB-5 India quota has not been hit, but it will be hit, as we've been discussing during much of the day. It will be hit this summer, and it's probably going to backlog a number of years, but it'll still be a lot quicker than the other options, EB-2, EB-3. So some of the changes that are in the offing, probably during this fiscal year in the US, and the fiscal year ends at the end of September. I know we've been talking about changes coming for the last few years, and the Immigration Service and Congress has been slowly and gradually extending the EB-5 program. But at this point, it seems extremely likely that this fiscal year EB-5 reform is going to come about. The first significant change is a drastic increase in the investment threshold from 500,000 to probably 1.3, 1.35 maybe, so almost triple So that's going to be the most significant change coming down the pike.
The waiting time for this for Indians is already at 5 to 6 years. There is a country cap for the EB5 investment. For every country, it's at 7%. So just very roughly, there are about 10,000 visas, EB5 visas handed out by the US. For every country, there is a 7% quota, which means Indian roughly get about 700 visas. What is the current waiting time? Post the changes, what is the expectation with respect to an increase or decrease in waiting time? And is there any way one can get around it, reduce the waiting time? Is there an expedited process which is possible?
There are people who say the waiting line is 5 years, 6 years, 2 years, 3 years. They are all lying because nobody knows. There are too many variables. So let's, however, it's kind of predicting the weather a month from now. You kind of may know what it is, summer, but you do not know what the temperature will be on that particular day. So you have to be continuously updated, feeding in the new data, speaking to the specialists. My colleague Mitch is certainly one of them. I'm trying to claim to be in that class as well.
We're talking about increased investment threshold to the tune of 2 to 3 times. So is that going to be a barrier, and therefore can we expect the waiting time to come down because it changes the investment thesis for a lot of Indians?
I don't know about the price increase. Here's what I do know. Right now the price is 500,000. Right now the waiting line is 5 or 6 years. This is on the table. I think the program is good. India's red hot.
Let's move on and talk about UK. Kelvin, you're the solicitor at Fragment. You're looking at the UK market. You're based in London. I think the big question everyone has now is on Brexit. And how does it change the investment thesis for the immigration, for the investment immigration into United UK's? Have the number of applications or queries come down? Walk us through what the picture is right now.
So in the short term, nothing has changed. What we're going to see is, as I think we move away from trading as much with the EU and start to build out trading relationships with other countries, we look to hopefully develop those routes and really try and bring in as many of the right types of people as we can.
Let's talk about the European region and Ireland in particular. We have Linda Sweeney here, who is a senior advisor at NICER Global, but she's based in India for the last couple of years now. What is it that Portugal and Ireland offers now to, say, Indians?
Europe is open for business. We don't have the caps. And the trends are not necessarily new. There's new countries that are coming on board and people are becoming aware of, and one of them is Ireland. Portugal receives more applications than the US program, which a lot of people are not aware of. To speak about Ireland, Ireland is, in the last couple of years, really growing as a program. And there's a couple of reasons for that. One is the uncertainty with Brexit. We have the fastest growing economy in the Eurozone and the 6th largest in the world. We house over 700 American companies alone, and a third of those are multinational high-tech companies. And one of the things around Ireland is education. So we are in the top 10 in the world. And people are able to now send their kids to Ireland to get educated. And we're seeing a huge increase in Indian students coming over.
Darwin, let's talk about India and Canada. Great bilateral relations. Canada has a huge Southeast Asian and an Indian diaspora. But the number of visas handed out are, I think, just 1,900 annually. Correct me if I'm wrong. And talk about Canada as an investment option.
Yeah, you're correct. The number is 1,900 families, which...
multiplied by 3 or 4?
Whatever. As opposed to, as Mitch said, 10,000. So visas, which is 3,000 families. But Canada's only 1/10 the size in population of the US. So it's really out of whack. You're mentioning 3,000 visas out of 1 million for EB5. It's very small. So you're correct, it's 1,900 families. The wording is not more than 1,200 from any one country per year, which means China. So maximum 1,200 families per year for the Quebec investor program, because that's the only true investor program left in Canada. And that leaves the rest of the visas from 1,900, 700 families per year from the rest of the world.
What are the applications? Say in 2018, how many applications did Canada see ex of China for those 700 families?
All 700. They're all taken up every year.
And what about the waiting period?
It's 1 to 2 years to get the provincial government approval from Quebec and another 1 to 2 years to get the visa from the federal government. So it's not fast.
Unfortunately, we've run out of time in this panel. I'll thank my esteemed panelists, the specialists who've joined in here, and the audience for being so patient. Thank you once again.
At Global Investment Immigration Summit held in Mumbai recently, a session on mitigating risks associated with investment immigration helped address common concerns that potential investors have but seldom get a platform to voice. Here are some snippets from that discussion.
Hey, hi everyone, good evening. Investment immigration is big business. An investment is an investment is an investment, right? So Pankaj, I want to first start off by asking you, an investment immigration program, right? What are the inherent risks? I mean, would it be forex? Would it be geopolitical, systemic? What are the biggest risks that an investment faces?
Depending on the kind of which program you're looking at, like Canada, where you're investing in the Quebec government bonds, you're relatively safe. But especially with the US program, with the Irish program, where you are investing into private enterprises, and that programs are regulated by the governments, not the investment, there is an inherent investment risk. We always, from the beginning, we've looked at all our immigration programs that we work with, that there is an immigration risk and an investment risk. Now, sometimes, like in the US, the immigration risk is linked directly with the investment risk. In other words, if the project fails or in any way in trying to create during the construction, during the development, or at some point, there's a pretty good chance that you will lose your immigration as well. So that becomes a double whammy for the investment immigrant, that they lose both their money as well as the immigration.
All right, so in fact, this is a question that I want to pass off to Chris. So Chris is the president and CEO of the HomeFed Corporation. So they're publicly listed. They have a track record of about 3 decades, right? You have a lot of mixed use, real estate projects, etc. Chris, how does real estate work out as an investment vehicle? Because a lot of people might be expecting returns in the short term, but this is a sector that has very, very long gestation periods, right? I mean, even in India, we've seen that real estate is fraught with a lot of risks. How do you mitigate some of that?
The safest portion of the capital stack is to be in the debt position, and that's where EB5 belongs. EB5 pays a terrible return. The return on EB5 is a green card. And so it makes the most sense to put it in a debt position where it can be in a safe position. There is no upside. You're getting a fixed return. There's no alpha that you're searching for. So when you're evaluating EB5, you don't need to be concerned about the upside. It's really about capital preservation. It's about looking at where you are in the deal. You look at the deal, you look at the capital stack, you look at the collateral, and make sure you are in a very secure position.
Okay, so that's very honest, and we appreciate the honesty, Chris. But Andrew, let me come to you next. I mean, you're in a region that is seeing a lot of, let's say Brexit. There's also the impact of perhaps trade wars, so to say. Currency is a big risk. Is there really no upside to investments? I mean, like Chris said, a green card, is that the best that your investment can yield? And if so, what are the best risk mitigation methods that you employ?
So there's a number of elements to that question. I suppose the first thing, to take Brexit as an issue for Ireland. Certainly it has a short-term financial impact in that many Irish companies would trade with the UK as its nearest neighbour, Having said that, the percentage of Irish companies doing trade with the UK is dropping and has been dropping every year for the last couple of years, and the Irish government's agencies are being very proactive in terms of helping companies to open new routes to market, new supply chains. So the medium to long-term impact of Brexit to Ireland, I think, is actually going to be very positive. The second thing, in terms of how we mitigate risk for investors, our starting point is exactly as Chris said. We want to provide a safe warehouse for the capital that the investors put in here, because they're coming to Ireland for the purpose of building a new life, securing residency, maybe ultimately moving towards citizenship. So our first priority is the preservation of their capital. All we do with the investors' money is to pool it and then provide senior debt to already proven profitable businesses. And we do that so we take a first charge on the property or on the business. So that way, all of our investors' money is asset-backed. And we are very conservative in our approach.
Okay, so that's also a lot about managing expectations, Sonali. You're with Julius Baer, right? You get a lot of clients coming to you. What's the kind of demand that you have seen, and how do you let a person know that, you know what, your investment is not going to be getting you any of those big returns? It's actually about providing you a new market for your business, or a new place for you to, for you and your family to move to.
When an investor or when our existing client comes to us approaching this subject, that he is looking at relocation, apart from analyzing what's the real objective of doing this relocation, we also make them aware that exchange control rules in India are very strict. So what you're walking into has to first fit into what regulators allow you to do, right? Most of the time, investors who are walking into this path are very well aware that this is not an investment option for them. This is an immigration option.
Okay, fair enough. Pankaj, in your experience that you've been dealing with investment immigration, have you noticed countries that might be better at protecting capital? I mean, are some countries, or do they have more stringent norms? Because after all, I mean, it's the weakest link, right, that you have to find. So are some places better than others?
I think yes and no. If you look at the Canadian program where you're buying, government bonds, by structure, it is safer. When you look at programs that are private enterprise investments, the government takes a step back and says, look, this is a private investment. You can do it yourself. You're an entrepreneur. Come and start a business or invest in an EB5 project. The government is not, or the immigration departments are not regulating any of this investment. But then when you look at a company like HomeFed, because they're publicly traded, they are under the, they have to report quarterly. So they're probably one of the only EB5 projects out there that actually have a disclosure going on about their EB5 loans. These are factors that favor or are better for investors because they are, they have to do the reporting.
All right, so the bottom line then is that don't think of this investment as something that's going to yield you returns, but this is something that's going to actually get you, a footprint into another country. And, as with every investment, there would be inherent risks. There could be emergent risks. Like Pankaj said, give yourself enough lead time. And most of all, do your due diligence, which shouldn't be a one-time thing, but something that's done repeatedly. Chris, Sonali, Andrew, Pankaj, thanks so much for joining me. I hope you had a good time. Good evening.
The first reason that people have immigrated over the years is for their future of their family, and in particular, their children's education. What's changed over the years is now people are considering the environment as well. So you see countries that typically have good environment, low pollution, Canada, United States, New Zealand, Australia, UK, Ireland. Those places, that's been the recent trend. Now, we never heard that years ago, that people were immigrating because of air pollution. Now we do. It's one of the added reasons.
I still think the United States has the best opportunities in terms of education for your children, quality of life, job opportunities, high salaries, and true diversity in the environment, which is extremely attractive.
Europe has a golden visa program in 23 of the 42 countries, and they all vary, so it's very specific to the investor's requirements. You can get permanent residency or you can get citizenship, so depending on If you're looking for strategic planning for your family, for your children's education, then you're going to go with the residence program. You're going to invest in that country, and hopefully by the time your children are actually finished their education, they will be already on the path to citizenship. Then there's other investors that just want the second option of a passport, so therefore they're just going to look at some of the versions of this option out there, and for example Malta, Cyprus are doing this program with limited requirements.
As far as the UK is concerned, it's still one of the biggest economies in the EU, and hopefully that will remain to be the case even if we do leave the EU. In terms of the draws for high net worth families, I think it's things like the quality of education. So the UK has some of the best schools and universities in the world. I think people are drawn by the quality of life and lifestyle in the UK and the culture. It has had a quite robust property market, and people want to continue to invest into the UK. And as a destination, I think whilst the investment threshold for a Tier 1 investor visa is relatively high, it comes with the fact that the UK can continue to maintain a large number of people applying under the category because of the quality of life on offer.
Focus. Ideate. Innovate. Enable.